Who is this consumer discretionary pick?
You know, it's actually more of a staples play, I would say, but Conagra Brands, which is ticker CAG.
Oh.
Yeah. To me, it's an interesting play in what has proven to be a weaker tape, right? We want to find some defensive exposure in this kind of market, which arguably could consolidate for another few weeks, right? We have Conagra having cleared its 50-day moving average yesterday after having seen a very significant corrective phase. And with that corrective phase, it of course underperformed the S&P 500. And what tends to happen in these weaker tapes is that you see rotation into the more oversold areas of the market and out of the more overbought areas of the market, which would probably most obviously be technology.
See, you tricked me, Katie, because I know you also brought MasterCard. So I thought the discretionary play was going to be more MasterCard because, trust me, I do not view food as discretionary, obviously, myself. MasterCard, though, MA, is one you think is perhaps also a little oversold, correct?
You know, it's funny because MasterCard does, I guess, kind of cross over a couple of sectors. It's technically a technology stock, but it hasn't been acting like one very much lately. And it is coming off, as you mentioned, oversold levels, and that's on an intermediate term basis. When it corrected, I think it was down about 16% from its highs. It corrected far before the market started correcting this month, but it maintained its long-term uptrend. So we've been sort of negative on MasterCard and also Visa for some time. But just with the recent price action, we've seen renewed short-term momentum in an apparent reaction to those oversold readings. Yesterday, I believe it got above its 200-day moving average briefly. So that renewed momentum and also renewed relative strength suggests that we'll see a good retracement, if not a full retracement, of that corrective phase. So that might be one way to position here.
Back in April, I was at a conference in Colorado. I did a one-on-one fireside chat. It was actually at lunch, so there wasn't a fire, Katie, and it was warm, with CEO Charlie Ergen of Dish. And we talked about all kinds of things, the regulatory environment. They're getting a big push into mobile, into cell phones. They're going to be one of the biggest cell phone operators in America, following some mergers that they are doing as well. Fundamentals aside, Dish stock hasn't done squat since April. It's down 20 bucks from its highs of a couple of years ago. What are you seeing in the charts about Dish that you like?
The most important takeaway for Dish is that it's a long-term base breakout. You have to take a step back and kind of zoom out on the chart to see it. But on a monthly bar chart, you can see this great sort of rounded basing phase and a breakout from that base this year. It's since been range bound, as you mentioned, but it's held support within that range and now has renewed intermediate term momentum, suggesting that it will make a run at the next resistance level. I tried to choose stocks here that have more than 5% upside to resistance. It's hard to find that right now because the market's been so strong, but these names stand out as potential ways to get exposure that looks a little bit different than the major indices, which may be under pressure.
Good stuff there as part of our Go Big or Go Home series. You like Conagra, we're talking food, how to pay for it, MasterCard, and while you're eating the TV dinner, you can watch shows on Dish as well. Somehow, Katie, it all came together.